473 days ago, I started buying Bitcoin. Back then, it was trading around $36,000. Now, 15 months later, Bitcoin has broken past $100,000 and is hovering around 80 to 90K. My daily buys are up 29%. My average price point is $62,763.11. And the best part is that this happened with no additional work from me. These buys were all automated using Robinhood. So after initially setting up the daily purchases, I didn't even have to think to make these gains happen. And honestly, most days I didn't even check the account, but I was still getting exposure to Bitcoin. So instead of listening to the crypto gurus on the internet telling me to lock in, bro, I chose to go outside and touch some grass. What does lock in even mean when it comes to investing? Should I stare at the screen harder? I don't get it. I know 29% is not the crazy high crypto returns we're all expecting, but if you consider that in one day, Bitcoin went from $84,000 to $94,000, and then the very next day it went back down to $82,000. Just holding on for dear life in the market is a win. Don't get me wrong, I'd rather have the Bart Simpson chart than this worm-looking thing from 2024. The market finally has a pulse, volatility is a feature, and your boy is here for it. By taking myself out of the investing process, leveraging Robinhood, and just letting time pass, I've managed to make a profit. But there is something strange here. Now, you might have noticed Robinhood tells us that Bitcoin's current price is 35% higher than what I paid on average. So why is my total return 29%? Why is there a massive 7% difference even though I've been buying $1 a day? Vlad, do you want to fill me in on what's going on here?
Well, I think to be clear, I'm the CEO of Robinhood Markets, which is a holding company.
No, Robinhood isn't doing anything weird. It's because I had a spot buy recently to bump me up to 0.008 Bitcoin. Now you're probably thinking, why? Why is that small amount of Bitcoin worth adding a spot buy for? And even then, all of it combined is only worth $700 or $800 at today's prices. Well, I enjoy this stuff a little too much. Hi, I'm Raj V. On this channel, we talk about money. Let's revisit Bitcoin's tokenomics so we can understand why I decided to hit the gas on my Bitcoin purchases. The current max supply is 21 million Bitcoin. This is baked into the protocol. Of course, the major criticism is that because it's code, this max supply can be changed. Yes, it is possible to increase the max supply of Bitcoin, but that would require a majority of network participants to agree to devalue their own holdings. I'm not sure if you and I would agree to make the money in our bank accounts worth less. Cough. Inflation, which means this is something to be aware of, but unlikely to happen with what we know today. All I'm saying is SpaceX is getting us closer to Mars, which gets us closer to asteroid mining, which means every shiny rock like gold, silver, and diamonds will eventually be worth next to zero. And there ain't no Bitcoin in space, cowboys. Also, we can grow diamonds in a lab now. In a few years, diamond growing kits are going to be in the forgotten section of a Barnes & Noble. And we don't even need to go to space to find more shiny rocks. We can just dig further into the earth. And since AI is going to take everyone's job, shovels are the new eggs. It's estimated that about 3.7 million Bitcoin is lost, unrecoverable, or very unlikely to be recovered. You might have heard about a guy named James Howell who claims his ex-girlfriend threw out a hard drive with 8,000 Bitcoin on it from 2013. This is why in my house I throw out the trash. But in between you and me, I would dig through a landfill for a couple $100 million. I got no shame about it. So that leaves us with about 17.3 million Bitcoin available. Today, there's about 8 billion people in the world, and assuming just 25% of the population, or 2 billion people, would want to own Bitcoin, if it's distributed equally, that would be 0.00865 Bitcoin per person. As time goes on, more Bitcoin will be lost, more people will buy and never sell, which means that 0.00865 Bitcoin is actually higher than what a fair amount per person would be in reality. And with recent posts from President Trump's official social media accounts emphasizing a US strategic reserve for digital assets, Bitcoin and other cryptos are set to be even harder to get. As demand goes up, supply goes down, which means it's going to be more expensive to get a hold of. How hard do you think it was for me to find some good B-roll of a seesaw? It was very difficult. I hope you appreciated the visual metaphor. Now, it's all fun and games today, but this whole thing feels like a race to get as much as possible before everyone else. And as we all know, life is not fair. The Bitcoin distribution won't be any different. So the next question is, what happens at the finish line when there's no more Bitcoin to mine years from now? After all, miners are financially incentivized to mine Bitcoin so they can sell for a profit. There's no Bitcoin to mine, Bitcoin, there's nothing to sell. Well, the answer is transaction fees. As the Bitcoin network gets more valuable, the transaction cost for the network becomes more expensive. The miners would eventually use their computing power primarily to secure the network and move value. Think of it like real estate. When you buy and sell a property, there are various costs to make those transactions happen, with more expensive properties commanding higher fees. With Bitcoin, the same thing would happen as long as people would want to continue to use the network, and if it gets more valuable in the future, that value will have some purpose because it's worth a lot of money and people will be incentivized to use the network or lose the value entirely. So that means that Bitcoin, in theory, becomes a self-reinforcing economic network, and the race to get in before it hits critical mass has already started. Of course, there's more to what happens to Bitcoin when it's all mined, but that's the baseline information most people need. Now that comes with a huge warning. After 7 years in crypto, it's clear to me that this is still predominantly a speculative market. Based on the past history, now we should be closer to the end of a crypto bull market. If the general long-term trend repeats itself, the next phase for it is the charts are going to show us a ton of upward price action with a few large 20 to 30, maybe even 40% pullbacks along the way. If this plays out again, that means that the worst time to dollar cost average is about to happen because we're buying at higher prices. But that also means the best time to buy is right after, because eventually prices start to fall and flatline, allowing us to buy the same assets for less dollars. With my time in the crypto markets, I can confidently say I do not know what is going to happen, but I have learned 5 hard truths about crypto that if I had known earlier, I would be worth way more money. Number 1, the money is in the waiting. Almost everyone who bought Bitcoin in the past, even at previous bull market tops, is in profit as long as they held. It's true that you probably had to hold at a loss for years, but prices eventually did recover. Number 2, choosing the right coin is a hard requirement. It must happen. A coin can go to zero and take your money with it. If you're not in a project that is being adopted, you are losing ground. But with that being said, number 3, more risk does generally correlate to more reward. I'm of course referring to altcoins outperforming Bitcoin during certain time periods. But people often forget that the risk is 100% loss of the value. It is in some ways an all or nothing trade, and there is danger in overexposure to one particular coin. Number 4, because of the volatility of crypto, the price moves faster than the development of the crypto. Oftentimes the coin is effectively the same exact asset, but the price is significantly different. It's up to us to determine what is worth it through the ups and downs. Which leads us to number 5. In a winning project, speculation turns to reality, and from there, the risk is reduced but the price goes up. And if it's an altcoin, the returns can be massive, even outperforming Bitcoin. A great example is XRP being down below $1 for years with the SEC's lawsuit, and with that risk almost completely gone, the price has responded. It's the one crypto gaining a lot of traction, so much so that it has a chance to flip Ethereum, and it's following in Bitcoin's footsteps, becoming more scarce by the day. I've been holding XRP for 7 years, and I have information that you can't just Google. You actually have to live through it. That's why I made these videos on your screen. Links in the description if you're on mobile, and for convenience, I made a playlist with all the XRP videos on this channel. Be sure to check them out. Thanks for watching, and I'll see you in the next video.